Good evening, everybody. Hope everybody's having a nice November evening. Supposedly 1 or 2 inches of snow projected for Pittsburgh, which is not good because I've still got 4 or 5 cars sitting outside. I had to run and get car covers today. But Tom, this is the time of year where Miami looks great. All right. Okay. We'll spend a little bit of time kind of addressing how to analyze a trend or how the different factors of the signals, patterns, and setups give us a little bit of an advantage, not a little bit of a great advantage. There are several. I'm about ready to take people up on it. It's hard jockeying cars around when they have no place for them. Well, as we saw, we had kind of an indecisive trading day today in the Dow, as well as the S&P 500, kind of doing a doji day here today. But this kind of gives us a much more clear anticipation of what the trend is going to do. NQC5, NASDAQ, same scenario. A doji right on the T-line. If you look at this trend, most people will say, shoot, I don't know which way it's going to go. Same here. We're just kind of flat. Which way it's going to go? Stochastic's kind of flat. However, we've got one major advantage. Looking at the signals, we know the signals have information that it can provide for us, such as the doji and our simple doji rule, which is if we see the pre-market futures positive tomorrow, what's that tell us? Tell us that this market's going to move positive. Any magnitude to it? Well, we've got the doji sandwich set up, which means we could potentially have another day, same magnitude as this day right here. If they did that, what would that essentially be telling us? That this resistance level right here is not acting as resistance anymore. On the Dow, that would essentially be telling us that this resistance level is not acting as resistance anymore. That if we start breaking out into new territory, now we've got a different pattern, a J-hook pattern. And if this J-hook pattern goes into effect, especially with a positive open telling us that this resistance level isn't acting as resistance, have another big day, a doji sandwich day, and confirms that our J-hook pattern's in progress, then we pretty much know where our potential target is on the next wave. Same magnitude as this wave right here. So this is not rocket science. This is just knowing what should happen after a doji. Now, on the other hand, if it opens negative, which way do we know it's going to go? It's going to go south. So even if they brought it back to the T-line, what do we have going on up here at the resistance level? A failure to break through the resistance level. We've had an up day, a big down day. An up day, if we have an evening star signal, we basically have a bearish engulfing signal, an evening star signal, and where is it occurring? Right at our resistance level. So the fact that we've got a doji up here gives us an advantage right away to say, if we wake up and the pre-market futures on the Dow are down 60, that's a good indication they're not going this way. If they start selling it off, you start taking profits and start going to some of the short positions, which I didn't even get to tonight. So anyways, anytime I do an analysis of the market in general, we've got three indicators that pretty much tell us what's going on in investor sentiment. The S&P 500, the Dow, and the NASDAQ. So just very simple. They're going to move the market in the direction of how they open this market tomorrow. That also allows us to, when we saw the reversal, we saw the huge morning star signal in the Dow. We saw a doji gap up in the S&P 500, and we saw that little hammer type signal, kicker type signal to the upside in the NASDAQ. So if they open this lower, they're pulling it back, at least down to the 50. If they open it positive, we're still in this upward trend channel. Our next target logically is up here to the top of the trend channel. So do we know which way it's going to go? Not really, but there's a big difference in knowing which way it's going to go and anticipating what to do depending on which way the signal's open or how they open it after a signal. Okay, some of the other indicators, the crude oil prices have popped up a little bit, but they haven't been able to get up above the T-line. If they open lower, that means this downtrend is still in progress. Interest rates are heading up a little bit, not anything tremendous. We're still in this slow uptrending channel. Stochastics getting toward the oversold area as they're coming back to test the 50 on the, this is the 10-year note. I usually don't pay too much attention to the Russell 2000, only because it's pretty much the same indicator as the NASDAQ. I mean, I could put it up there, but it would just kind of mirror the NASDAQ most of the time. Okay, let's see. The dollar. The dollar has moved up nicely, but what do we anticipate when they come up, they hit a resistance level, and then they go through? As we can see in this case, we had the doji sandwich that started the uptrend. The uptrend stalled right here at the 50. Waited for the T-line to catch up and push it through. Now we've got a bearish Harami today. What's that usually indicate? Well, if this was a resistance level, they're usually going to back it off, test it, see if it's a support level. If it's a support level, they take it back up, probably to the next moving average, the 200. It doesn't matter what the stochastics on the NASDAQ are falling. Not really. They're just going sideways. Remember, the stochastics only tell you where you are in the trend. We're not trading the stochastics. We're trading the signals. Yesterday or Friday, we had a bearish or a bullish Harami. What did the bullish Harami tell us? The selling has stopped. So now we want to see whether they're going to take it back up above the T-line. If they break out through this level on the NASDAQ, we're in the next wave up, or at least heading up to the top of the channel. If they take it down lower, that tells us we couldn't get back up above the T-line. Probably the 50 becomes the next target. Okay, let's see. The British pound sagging, the Japanese yen sagging, and the euro dollar still sagging. So now they popped up today on the euro, but not anything that would give you any great strength. If they pop this, more than likely the T-line is still going to be your target. Nothing too much. I've been short feeder cattle over the past few days because it's still in its downtrend, probably coming back to test the T-line. It's up a little bit after hours, but usually I don't pay too much attention to after hours trading because it's usually about 1/50th the volume is during the day. On the other hand, live cattle has been moving up. Kind of a bullish engulfing signal, a close above the T-line, double bottom, trading positive after hours. That probably tells us there's some more upside. And then hogs just flat. So we got the feeder cattle heading down, live cattle heading up, and hogs. This is why we want to be able to analyze what the charts are doing with the indicators. I wouldn't be long or short the hogs right now because they're just They're not telling us anything. They're stuck between the T-line and the 50. Stochastics going flat. So at this point, you just kind of wait for a breakout, one way or the other. Let's see, did we do gold? Gold, still in a downtrend. And notice what gold has done here recently. Whoops. We've been stuck in this downtrending channel for a while. So until you see something dramatic that changes the overall trend, I would suggest you're still in this trend, with this being your downside target. Silver, the same scenario, gets back up here to the resistance level. Notice, let's see, let's make this big enough where we can see it. Notice we have up in the overbought area, we had a doji, gap down, and they can't get this back up above the T-line. I would think here's your target. That's where it's aiming for. Jeff, hang on to your individual stocks. When I get it done with everything, when I tell Jim to do the double line, then you can put in your individual stock requests, and we'll get to them. The grains, soybeans trying to break up through the 50. Wheat, there's another case where wheat has been in a steady downtrend, and corn has just now done a reversal with a left-right combo coming back up through the T-line. More than likely, they're trying to break this downtrending channel on corn. Live cattle is, I think live cattle is where they still have them out in the fields, and feeder cattle is when they're kind of feeding them special grains like corn or that sort of thing, and they're in feedlots. Okay, some of the other ones, sugar. Sugar, you stay short until you see a buy signal, but notice you're getting pretty close. You're in the oversold area, but you did do a left-right combo. If I was short sugar, I'd want to see it open lower, breaking this little support level. If it traded back up above today's open, I'd cover short. Cocoa, another one that has gapped down. Whenever they gap down through the last support level, that means there's probably some more downside to cocoa. Coffee can't get up above that T-line. Anytime you see them take it up, this is why when it finally breaks out and it's trading positive, put your stop at where it opened, because if it comes back down through there, especially when they've just broken out through the T-line, if they come back down through, it's over again. You're still in the same direction. I don't trade gold futures only because I got too many other things to trade. And I think the margin for trading of gold is a lot higher. Okay, let's see what else we got here. Corn, gold. British over dollar. All right. Okay. Let's take a look at a few that we've been following. Whoops, I don't know where that went. Air is still acting well. Why is it acting well? Here's where you have two alternatives. One, you close out the position. Now, what do you want to see the next day? Remember, what creates a reversal? A candlestick sell signal and a close below the T-line. Two things are going to happen. One, they confirm the signal, which means they open lower and start trading lower. On the other hand, they stay with the trend, which means if they open it higher and bring it back up, your trend above the T-line stays in progress. Sound breaking up, Windsurfer, I think that must be from your end. That's just a problem with the internet connections. So anytime I close out a position, after it's been trending like this, I'll buy it right back. I don't mind closing it out here and buying it back here, knowing that I'm still above the T line. MU, another one, and I'm showing these because these are all simple, contentious. Once they have that signal and you're above the T line, you just stay with it until you see a candlestick sell signal and a close back below the T line. PACD, there's that nice scoop pattern. We recommended this a few days ago. It's bobbed and weaved up here, but it stayed above the T line, which still means we're in an uptrend. And GoGo was another one that's been thrown around in the chat room quite a bit. It had a bullish engulfing, kind of fry pan bottom, cup and handle, and then a big pop like this. Now I show this because there's a lot of a lot of people finding good stock situations in the chat room. I guess we're averaging about 250 people in the chat room every day, which means there's lots of eyes looking for good setups. So as somebody that's fairly new, don't be afraid. If you see something and say, well, why are you recommending GOGO? Let them explain that there's a cup and handle setup, plus we've got a bullish engulfing signal. Do we always get pops like this? No, the one thing I like to stress is that if you see a bullish signal, the probabilities are that you're going to be going up from here. And there's a possibility in those probabilities that you're going to get a big pop. The nice thing is, more than likely, if there's going to be a big pop, it's going to be after a candlestick reversal signal. Let's see, ONVO is one that we've been holding on to because it's very simple. It has not been able to close below the T line ever since it broke out of this fry pan bottom. And here's a case where this is why we want to see a candlestick sell signal and a close below the T line, because as long as it stays above the T line, for you new folks, there will be times where you see candlestick sell signals, but you have to add that extra criteria of a close below the T line. We've had people like John Bollinger on here, people doing the Aiki-Chuki cloud, all sorts of indicators. But the most, what I want to say, consistent and most profitable indicator that I've come across as far as trend analysis is the 8 exponential moving average, the T line. I was making good money before being exposed to the T line, and that improved dramatically once the T line came into or I started following the T line myself over the last, I guess it's 3 or 4 years now. Gaps usually do get filled, but they may not get filled this month or next year, next week or next day. I'm not worried about a gap until this trend is over. I may not be paying attention to this stock once that trend is over and it's going back to fill the gap. And that gap could be filled 2 years from now. DDD is another one that's been acting very well. Ever since it popped back up above the T line, notice what it hasn't been able to do. It hasn't been able to get below the T line. Now we've got that little J-hook type pattern. And this one, remember, where do people buy? They start buying exuberantly at the top. This is a stock that could very easily go to 85, 90, 100 just because of the move it's already had so far. Remember, once a stock starts moving big, who do you think is talking about it? Everybody. And there's most of the not American public, the world public that can't resist not being in a fast-moving high. The Aiki-Chuki, I forget what the cloud is. We also have the Heikin Ashi that's directly related to candlesticks, but it's a lagging indicator. There you go. Ichimoku. Yes. It is overbought, but remember, it's been overbought now for 3 months. Not 3 months, 3 weeks. So right now I'm watching it to see if the exuberant buying's coming into. Where do we see exuberant buying? If they gap this up tomorrow or in the next few days, it's time to start watching for a sell signal. Ichimoku Cloud. Ichimoku Cloud. All right. Just hooked on phonics. TSL. Whoops. S.TSL. This one you want to get ready to buy. Once again, we can see the move. There's a J-hook pattern. Pull back. Or still not. Or back up above the T-line. If they break out through this level, look for another 2 or 3 points to the upside. 3 or 4 points to the upside. FSS. Another one that looks very good. And it's sitting right now with a doji sandwich setup. If this opens positive and trades positive, a doji sandwich, where's it going to take you to? Hopefully up here to the top of this trend channel. Okay. All right, and what else we got here? S.SB. Another one that came out of this little scoop pattern nicely, has pulled back, told you the profit taking's over. This one you definitely want to be a buyer on a positive open tomorrow. And DYAX. There's your J-hook pattern again. This one will probably be reissued as a buy on a positive open tomorrow. We're already in this when it broke out through this level. We're probably going to reissue it as a buy tomorrow, taking you up to the next level. And First Solar was one of the solar stocks. Notice where it couldn't close. Couldn't close back below the T-line. How did it break out? This little downtrending channel with a doji gap up. And they're still not trading below the T-line. Lock. Lock looks scary today, but this is why you always wait to the end of the day. It looked ugly down here. If it had closed down here, this would have been a closed out trade. But the fact that they brought it back up, remember, the most important decision is the final decision. That's why the Japanese rice traders and close, the open and the close, because everything else is just noise during the day. Ichimoku. All right. Or we'll just kind of call it the mushy cloud. That way, NBG. That looks like a little fry pan bottom setting up again. All you can do here is stay long as it doesn't close below the T-line. This is, again, a very beneficial element. I mean, it can look ugly, but as long as they can't close below the T-line, that means you still have high probabilities that you're in an uptrend. And OXBT. Whenever you see a big, huge breakout like this, that means there's a brand new dimension in this stock. And if that huge breakout occurs after 4 months of flat, indecisive trading, something new has happened. Which, over the last couple of days, we had a bullish Harami telling us the selling has stopped. It opened positive but traded down. This is still a buy, especially if it comes back up through today's open. This is one of those, there's times where you want to get into something because it's got a good potential upside. This one has that potential upside. Let me see if I can do this correctly. the upside to this one, if they get it moving, and right now we can see they're moving in the right direction, is they could bring it up to the $15 area, that's double. They could bring it up to the $20 area, and or they could eventually get back up in this area. These are the ones that if you get into and you hit them right, and that's what we have the advantage of seeing what's going on as far as investor sentiment. This is going the wrong way. It only takes one of these a quarter to be an average investor in all your rest of your trades, and then hit one of these where you're up 400% to make a very good return over the Ichimoku. Ichimoku. All right. This is I think NBG looks ugly. NBG. Well, I still think it looks attractive. I think it looks here, so I'm going to let the chart tell me what to do. One thing I discovered is there's lots of times when I think something, what I think doesn't mean a hill of beans. It's what everybody else thinks. So if this is a nice fry pan J-hook type pattern, here's our potential target up here, which means there's still a good 22% return to the upside. Yeah, I'm going to give the example. I mean, you might not think very much of the Greek banks right now, but what you think or what anybody thinks doesn't mean a hill of beans. It's what everybody's thinking. And I relate a story years ago when I first started switching candlesticks over to stocks. One of the first stocks I bought was a company called Cellstar out of Dallas. And it was trading at 7.25, and it did a huge bullish engulfing signal after a long downtrend. Then for the next 6 months, everybody and their brother that came on one of the talking stations said stay away from the solar or the cell phone companies, which this company was. Stay away from them because everybody had cell phones. There's no more upside potential. And that stock during the next 6 months went from 7.25 to about 21 when everybody was saying that the cell phone industry was dead. So that was my first illustration to say you don't listen to what people are saying, you listen to what the stock is saying. Now, at the other end of that, I had a buddy in Dallas who was running I think he had a $40 million fund that he was running for his father-in-law, and they would have lunch with the management of Cellstar about once a month because they owned a big chunk of their stock. And when the stock hit 21 and I saw a big bearish engulfing signal, I called him and said, what's the story? Because he would keep me apprised of what was going on. And he says the owner or the CEO of this company owns 4 million shares of this stock, and he's ready to sell out at $25 a share because that will give him $100 million. So I said, okay, except at 21 I saw a huge bearish engulfing signal. So still getting educated about candlestick signals, I was kind of in a dilemma. It was maybe $25 a share, up another 20%, or why was there a huge candlestick sell signal? Fortunately, I sold half the position at around 21 and sold the other half of the position at 17 because it would never show a buy signal. And the stock eventually went back to 2, which was perfect illustration of it doesn't matter what people tell you, it matters what the stock is telling you. So anyways, that's a long dissertation to say this might look ugly for some reason. To me, it's still a fry pan bottom. You hang on to it. Okay, I guess I got off on that soapbox pretty good, didn't I? All right, here we go again. TITN. Oh, no. Let's see if something else will come up. Bah, how come this system does this every night? Huh. Well, shuzzbots. All right. Hold on for a second. We're going to do this. All right. We'll go to these charts. TITN, another one, even though it's backed off today, it's still above the T line. Again, stressing the point that as long as it stays above the T line, you want to stay with the position. Scotty did a morning star type signal today. Looks like it bounced right off this downtrending channel. Where's the next target? It could probably come back up here. First of all, you definitely want to see it trade positive for the next couple of days, getting back up through the T line. And Foo, another one that if it opens positive tomorrow, you can be buying this one back up above the T line. And STXS, Foo's got earnings, all right. STXT, I can't say it, STXS. This one you can definitely be buying on positive trading. There's your Morningstar signal. There's your little inverted hammer signal, bullish confirmation, close just above the T-line. If they open up positive, pretty much tells us the T-line is not going to act as resistance anymore. This one's been a quiet worker here for a while. CLNT, Doji right here at the resistance level. If it opens positive tomorrow doing a Doji sandwich, this could break out, and if this breaks out of this big wedge formation, there could be huge upside for this one. This is why you want to watch to see what type of individual signals you have and what type of patterns you have. If they break this out, it could be a big, huge mover, well above this level up here, which would be about a 35-40% move to the recent highs. It's in the overbought area, not quite. But if it does a Doji sandwich, what do we know from a Doji sandwich? There's still going to be more upside. If there's more upside after breaking out through this level, that tells us we've had a wedge pattern breakout. Remember, the overbought and oversold on the stochastics are a function of where it's trading in the trend. Doesn't necessarily mean that trend is over. You've got to take a look to see what type of patterns and signals you're coming off of. The signal / pattern are your main elements for your decisions to be buying or selling. Everything else is a confirming indicator. You'd be more inclined to fill the gap to enter on what, GB? Let's see. Here's a piercing signal on ABBV. This one you want to take a look at seriously for positive trading. What gap would you want to be for it to be filling? Exactly wrong. What do you want to see after they've gapped up through kind of a resistance level. You want to see that's the reason they went there, was they are gapping through it. So many people say, I want to see it pull back before, so I can get in. What do you think is happening when a strong stock, or a stock that looks like it has a strong chart pattern is pulling back? It's telling you the bears have more control than the bulls. Why do you want to be in a strong chart pattern if the bears are in control? If I see a strong chart pattern, I want the bulls to be consistently in control. I don't mind paying up, knowing that I'm moving in the right direction. And not picking on you, GB, because a lot of people say that, yes, the strength is coming from that gap up, especially through the resistance area. And your stochastics aren't in the overbought condition yet. So a lot of people say, I want to see a stock pull back so I can get in. What is the rationale behind that thinking? It's that if you see something moving up and it's already higher than you think it should be, you think that if it pulls back and as soon as you buy it, it's going to turn right around and head back up. That's kind of the immaculate entry syndrome that is going to kill you in two ways. Number one, if you're waiting for something to pull back so you can get in, that means it's pulling back for some reason. It's not going in the right direction. Number two, if you're waiting for it to pull back and it opens positive and goes here up another 40% while you're waiting for it to pull back, you're missing out on the trend. I will always rather buy into strength than wait for a pullback, because you don't know what that pullback is for, whether it's profit taking or that was it. That was the top of that move. All right, that's another soap opera issue. We can just, and here's another one. Whoops, that was. I'm not looking at the monthly right now. If I buy this, I might only own it for 3 days, 5 days, 7 days. So I don't really give all that much weight. Everything looks good on the monthly. Probably everything looks good on the weekly. I'm more interested in what is it doing right now that tells me that it's breaking out through this resistance level, that if it opens positive, I got a doji sandwich set up, which means I'm moving higher. That's right. There's a good way to get in without having to pull back, is buy it when it looks like it's the time to buy immediately. That was another function. And I want to remind everybody, for those of you, when I said call me if you're having problems, I've got a number of calls, and I'm not avoiding anybody. It's just I'm still trying to get into the new place, and so it'll be near the end of the day, end of the week, before I can start getting back to everybody. But rest assured, I've got everybody on a list, and I will be calling back. Anytime you see a big signal, VISN, left-right combo, little mini inverted hammer, right off the 50-day moving average, this is the type you want to be buying, because this told you there was a dramatic change of investor sentiment. You can look for this to have a nice upside potential from here. A lot of people say, well, shoot, I don't want to buy a stock that was up, in this case, 61%. You do if it's going to go up another 200%. Same scenario on USU. There's your Morningstar signal, huge Morningstar signal. What did this big move tell you? There's been a drastic change of investor sentiment. Does that always work out? Big Morningstar signal. What happened afterwards? A continued upside in the Dow. All right. All right. There are signals. This is why you want to know your signals and patterns. VPHM. Might not have gotten into this, but notice what you had right here. A little Morningstar signal, and then pop. It went up 25%. This, if you see a little Morningstar signal at the end of flat trading, That usually acts like a slingshot effect, that mini scoop pattern. We're seeing that right now in KNDI. Kind of a flat trading Morningstar signal. This will be recommended tomorrow on a positive open with a T-line as your stop, because you got a Morningstar signal, you've got a doji gap up, your stochastics coming out of the oversold area. You're right here at the bottom of this trend channel. Where's our first upside target? Probably back up here somewhere. But this is all an indication there's been a drastic change of investor sentiment. Yes, probably BPHM probably got bought out. Good idea, or that's a good probability. But down here, we may not know why a stock is moving, but if we can see the little setups, just tells us there's a good probability. In this case, if you saw this forming near the end of the day, these are the cases where I'll say, all right, I'm going to buy half a position here, and if it opens positive on the next day, I'll buy the other half. Back to CONT. Would a looked at either to give reasonable help to society? You can. And that's how I use my entry and exit strategies. But once the 10-minute chart is done at the end of today, this absolutely means nothing here, because what is the candlestick chart telling you? What's occurring in investor sentiment right now? And when this investor sentiment ended today, that means investor sentiment is going to be completely different 12 hours or 14 hours, whatever time frame it is, until they open the market tomorrow. So the intraday chart comes to an end when the market comes to an end that day. Okay, let's see. Kendai, ISIS, Morningstar signal. I'd keep an eye on this one. And, I'm way past time already, aren't I? SIWR, there's what we call kind of your median line, almost a hammer, not quite. But this is bullish confirmation, telling us kind of a Morningstar signal breaking through this downward trend channel. Wave 1, notice what happened with wave 1. A huge move to the upside, profit taking, and then kept right on going until we started seeing toppy signals. Now it's telling us to buy back in, because if this is wave 1, wave 2, where did wave 3 occur? Bouncing off the 50s, starting back up again. Morningstar signal, we'll find another one. The Morningstar signal is a big down day at the end of a trend with a day of indecision and then a big bullish day. We'll find some more here before we go. Here's one that's telling you that this fry pan bottom is setting up. RCON. This one I wouldn't be afraid to be buying on positive trading tomorrow. NQ. Bullish Harami, double bottom, close above the T-line. This one you can be buying, your next potential target up here, the 50-day moving average. And ABFS. There's your scoop type pattern. This one, if you're buying, look for a 45 degree to come off of here. Again, this one was up 15% today. That meant there was a drastic change of investor sentiment. The reason I'm showing these is a lot of people say, shoot, I don't want to buy a stock that's already up 3%, 5%, 10%, 15%. What we're trying to illustrate is the reason that stock is up 3, 5, 10, 15, 20, 40, 80% is because something new is happening, and that's usually the signal for the next price move. Here's another case where Jern did some profit taking. Today, they said the profit taking was over. They couldn't get back into the trend channel. So be ready to buy this on positive trading tomorrow. An ALDW, big bullish engulfing signal. This one you can get ready to buy if it comes back up through the T-line. And this is a perfect illustration of seeing a big move, a day of indecision. This makes it very simple. If you're getting ready to buy this because you missed it on the first go-around, something happened here. There's your doji gap up. There's something that people wanted to get in dramatically. The next day there was profit taking. Very simple. Put your buy stop right above where it opened the previous day, because if it comes up back up through there, that means the bulls are back in control. That the profit taking's over. A positive open is just seeing a trade positive, either flat and starting to trade positive, or if it opens slightly lower and goes positive, you want to be buying. Also, positive means that we don't want to see that the pre-market futures in the Dow are down 140 points. That means there's a lot of selling going on. People are going to be a little bit iffy about buying on that day. But if, let's say, the pre-market futures tomorrow, the Dow is up 15 on the pre-market futures, and this is open slightly positive, you can be buying on a positive open. And then where's the logical spot that would tell you the sellers are still in control? They shouldn't come back down through the open of this day's candle. If they did, that means there's too much bearish sentiment. What do you mean when you look to, say, a 45 degree? When you have a big price move, we'll get to a 45 degree. I'll try to point one out. Here would be a case of a 45 degree. From here, you've had a big price move. Now you probably will move 45 degrees off of here, just kind of a steady uptrend. What will be the trajectory? Usually the trend prior to the pullback, and then a move back up to that trajectory again. Halo, halo with a big kicker signal. Watch for a 45 degree to come off of here, kind of the same trajectory as this trend at this point. And where am I now? Let's see, GTAT. GTAT, there's a morning star signal. A down day, a day of indecision. The third day closes more than halfway up this. That's called a morning star signal. Basically tells you the bears are in control, and there was a day of indecision. Now the bulls are in control. Very strong reversal. It's very symmetrical. Okay, oh, that's right. A couple more. VISN. That's a morning star signal. Down day, day of indecision, big up day. Now, all this had to do was close above the halfway point of this candle, and that would have been a morning star signal. The bigger they close up here, the higher the probability they're heading in a positive direction. And ZIOP, another morning star signal. Down day at the, in the oversold area, day of indecision. The third day closes more than halfway up this candle. This one you buy on positive trading tomorrow. You just want to see it close above the T-line. Thank you, Stephen. Okay, GTAT, WHX. This is kind of that slow curve breakout. Now, when you see a breakout occurring like this, especially above a resistance level and a resistance level over here, that probably tells you there's more upside. Where is it going to? See if I can do this elegantly. Right in here, there's a little teeny gap. So there's your next target, is right up in this area to fill this gap. Uh, 45 degrees, equal time run right distance to price rate run up distance. I guess so. Let's see. YPF. Now this is where you kind of observe the obvious. There's your morning star signal. Where did it occur? Smack dab on the 50-day moving average. Now, where do you think everybody that's buying WPF in big size is buying? They see a pullback. Where do you think they want to start buying? On the next support level, where the stochastics in the oversold area. We can see immediately what is happening at these levels. I keep reiterating that somebody asked me a while back, how many days do you have to wait to confirm that your uptrend's in progress? With candlesticks, it's 0. If we know what signal's happening right here, and we start seeing it trade positive, we can already anticipate what type of signal it's going to create, at least a Morningstar signal. Where do we want to see it eventually get through? Up through the T-line. And if it gets through the T-line, what's that tell us? That we've got a candlestick reversal signal and a close above the T-line. We're staying long until it closes back below the T-line. And Sears Holding, another Morningstar signal. This one you can be buying, because if it opens positive tomorrow, what else is it doing? Not only is it confirming our Morningstar signal, but it's breaking through this downtrending channel, telling us there's no resistance there anymore, can move up further. Fran, there's your little scoop pattern. Where did it break out? Right at the resistance level. This one probably has a lot more upside to it. There's a big gap up here that if it gets out into that territory, it's going to run pretty quick. Cena, there's your bullish Harami in the oversold area. What do we have the next day? A gap up. And where did it gap up? It gapped up through the T-line. This tells us we've got upside potential. What's our first target? Filling this gap right here. And Sohu, another Morningstar signal. And there's your inverted hammer. Somebody was asking, what's an inverted hammer? An inverted hammer is a very extremely high probability trade. The bears are in control. The bears are in control. The bears are in control. And then, ooh, man, the bears are a little bit nervous, but by the end of the day, it closes back down here. Bears say, shoot, that scared me. I thought the bulls were stepping in. Next day, they open up positive. The bears say, shoot, the bulls are here again. Get me out of the way. This makes for a very simple trade. And this is my own estimates of the probabilities. I would say at least 95% and even greater. But if you see an inverted hammer in the oversold area and they open positive the next day, you're going to go positive. Whether it goes positive 3%, 30%, or 300%, you don't know. At least you know you're going to go positive. Which also makes for a very good stop loss. If the probabilities are that if you open positive, it should be going positive, where should it not trade? It shouldn't trade back down below the head of the inverted hammer. If it does, that tells you the bulls aren't there. The bears are still there. You close out the position immediately. Now look at this Morningstar signal in an inverted hammer. Where did it occur? Smack dab on the 200-day moving average when the bulls started stepping in. So this again is just kind of observe the obvious. When we start seeing candlestick reversal signals at technical levels that everybody else is watching, that pretty much tells you what they're doing at those technical levels. Best Buy, scoop type pattern with a bullish engulfing signal. This one's probably going higher, the same magnitude as this move right here. Bullish Harami, gap up. Bullish engulfing, gap up. Probably have another 4 points, 5 points to the upside. RGEN, notice where this broke out. Broke out through here with a flutter kicker signal. Tells us there's probably a lot more upside to this one. And the slow curve, this is why we like slow curves, because you get big, huge price moves. This is RDA. Anytime you see something setting up like this, you want to be buying. Because what's your risk-reward factor? Your risk factor is they fail, you're out a small loss. If it works, you're going to have a huge gain. Okay, I guess that's about all I've got for tonight. Again, if this market is going to make for very simple trading tomorrow, if they open positive tomorrow, they're breaking out through resistance levels. If they open weaker, you're seeing this whipsaw action right up here at the resistance level. Tells you that they're probably not going to go through that upside resistance. How effective do you think running scans that bounce off 50, 200 with the right signal? Shutterman, anytime you can add more evidence that is a reason for a reversal signal, the better off you are. If I can see a strong buy signal at a major support level, meaning a trend line, and a moving average. Anything I can add to the reason why that is moving at that point, the better off I am as far as probabilities that that's where they're moving it up. How do you decide which of these potential setups to trade? So many choices. We will do a scanning, how to scan for the best possible trades probably within the next few weeks. Yes, this is recorded. Then we will, did I not do ARNA? I just thought I did ARNA. We will do how to scan and then how to sort for the best scans at the end of each day. Is there any reason why you don't watch the IWM? Because it's usually pretty much consistent with the Dow or with the NASDAQ. I mean, I can. It's just that I can get my analysis pretty much with the 3 majors versus the 4 majors. The lesson on the 3T and the T-line, yes. All these are going to come up. The only reason we've been lax here for the last few weeks is because of the move from Houston. Hopefully I will have Comcast at my other house tomorrow, getting everything set up. Unfortunately, I'm still not finding all the stands for my monitors. And okay, any questions on candlesticks? Not on individual stocks, just questions on candlesticks. Oh no, it's better than that. Hold on for a second. Comcast is going to be there anywhere from 8. I forgot to hit the microphone back on. Okay, I'm looking for Tammy's question at 8:53. All right. Would you trade YPF off the 200 or wait till it closes above the T-line? Am I looking at the right one? My YPF is already above the T-line, and the 200 is down here. So, did I pick the right one? Tammy, I'm confused on that one. Oh, yeah, that was a good joke, Gene. Sorry you all missed it. Okay. What is the best chart pattern to describe for T-line and stochastics? What is the best chart pattern to subscribe for T-line? And Miles, you got me there. I don't know what that means. See, premiums at the money. If the premiums is greater on the put side, is that a signal there is underlying will be down or up? It doesn't, nothing. If somebody is buying $4 million worth of stock and they want to protect themselves and they're buying the puts, that purchase has absolutely nothing to do with which way the stock price is going. That's a defensive mechanism. So if you're looking at candlestick signals, nothing else is an indicator other than what the chart pattern is doing. What the chart pattern is doing. The volume of calls or puts have nothing to do with the direction of the stock. Did you answer a question regarding number of monitors? Oh, John, no, I didn't. I usually have 3 monitors. I've got a 30-inch and 2 27-inch monitors. And I got 2 computers up here in Pittsburgh, one at my office at my mother's house and the new office. What is the best source for T-line charting? Oh, Mike, you can put the T-line in any chart you want to. So I've got computers. I think they're the Tiger Direct. Z115. They're actually computers for the game playing ones, and so I've got, and every time I look around, I find another computer sitting somewhere in a corner. So, okay, Jim, go ahead and do the double line. There we go. All right, Jim, in 3.8 seconds, do another double line, like right about now, so we can stop the scrolling. Yep, we're not stopping the scrolling. Okay. Ellie, nothing there yet until it gets back up above the T-line. AEM, nothing here that would get me excited. Your stochastics are heading down. You had a strong bullish signal, but it kind of negated today. I would find something else to trade. GOLD, another one that looks like it's setting up in a wedge. I wouldn't be long or short this one. And Hecla. Now this one I wouldn't be afraid to be buying on positive trading from here and use the T-line as your stop. Let's see, Arna. Arna, you can be buying this one on positive trading. Use the 200 as, the 50 as your stop. But notice what it's done is a star, doji, gap up, gap up. That tells you they want to get into this one very anxiously. So at this point, I would probably use the 50 as my stop. It shouldn't trade back below that level. Zillow, if you're short, you stay short. And you don't go cover a short position until it comes back up above the T-line. Yelp, same scenario. You stay short until you see a buy signal and a close above the T-line. TA, this one all you can do is stay long until you see a sell signal. ESI, nice J-hook pattern. That's a nice looking chart. There's your Morningstar signal. Close above the T-line. There's your J-hook pattern with a potential doji sandwich. That's a very nice looking chart. And KEY, not as strong a chart, but it's still a J-hook type pattern. This one, if it trades back up above today's open, you can be buying. Rig, you don't know. You definitely don't short it. But if you're long, you put your sell stop below today's low. It shouldn't come back through that level. MHH, MHH, daydreaming, sorry. Stay long until you see a sell signal. At this point, I'd use today's open as my stop. It shouldn't come back down through that level. All right, this is an odd one. PNLYY. Not coming up. PTIE. Well, what's happening here? PTIE. This one you can be buying on a positive open. Not a reversal signal here, just kind of a little scoop, which means you're probably going to get another buy signal on a pullback. So I'd be a little bit more diligent watching for a pullback. ENTR, this one you can be buying on positive trading, except you're getting very slim. You got a 450 stock trading 380,000 shares. Just be careful of your volume on this one. CHPT, nice breakout. This one, all you can do is stay long. I'd use the halfway point of this candle as my stop. BEAT, this one you stay long. This one's got that perfect wave set up. Wave 1, wave 2, then you gapped up through the resistance level on wave 3. This price still has another 4 points to the upside. And YRCW. There's your kind of your stutter step. Your Morningstar signal came up, pulled back, Morningstar signal. You want to be buying this on positive trading tomorrow. Once again, using the T-line as your stop. WLT, all you can do here is stay long. As long as it stays above the T-line. If it opens positive tomorrow, you want to be buying. It's doing the classic where it came up, failed at the 200, pulled right back to the T-line. You've got the T-line crunching it back up. If they open this positive, the second time it tests the 200, it's going to go through. Mylan, this one you can be buying. That's coming out into new territory. Monsanto, I wouldn't be too anxious. It's not doing anything great until it gets up through the 109 area. Just have to be careful the lack of magnitude of move on this one. LNG, another one that's doing kind of a scoop pattern. You could be buying this one on positive trading using the T-line as your stop. And MPEL doing the slow curve. This one you can be buying on positive trading using the T-line as your stop. St. Joe's, whoops. This one, I wouldn't be long or short. There's nothing here that, they failed. You had that inverted hammer gap up, and then they closed it back below the halfway point of that candle. I'd be someplace else. RBCN, this one you can be buying. Again, that stutter step with a second Morningstar signal. You can be buying this one on positive trading. SHOS, same scenario. You want to be buying this one on positive trading and use the T-line as your stop. ACAS, piercing signal. Positive piercing signal confirmed. You can buy this using the T-line as your stop. EXC. EXC is in there's better. Even though you're heading up. Now, if you're owning this because of the dividends, you're all right on it, but I wouldn't be necessarily buying it for any reason. And SPG, this one needs to hold here at the 50. You can see where it went. Broke Came up to the 50, pulled back. Went through the 50 to the 200. Pulled back right to the 50. So you need to see positive trading on this to tell you the next wave is up. SLW. Stay short until you see a buy signal. At this point, use the T-line as your stop. And not so much a head and shoulders as it is in a steady downtrend. AH, stay long. At this point, I would use today's open or low as my stop. It shouldn't come back down through that level. CSUN, you can be buying on positive trading tomorrow. FHN, this one you can be buying. Notice it came back and used the T-line as support. If it opens positive tomorrow, it's breaking this interim downward channel, heading for the next resistance level. And AEO, all you can do here is stay long as it stays above the T-line. Dollar General, Morningstar Signal. You can be buying this one on positive trading on tomorrow. Notice where it's Morningstar Signal, right here at the 50-day moving average. And PATH, PATH needed to get up above the 50 today. Very simple. If it opens lower, it's coming back to test the T-line. If you're looking to buy it, you put a buy stop one tick above today's open. DRAD, stay long until you see a sell signal. And Yahoo, Yahoo broke this downtrending channel. If you're a buyer, use the T-line as your stop. And LFL kind of back and filled here. You should be out of this trade, but you can buy it back if it closes back up above the T-line. CCJ, stay long as it doesn't close below the T-line. Amazon, this one you can be buying on positive trading tomorrow after the bullish Harami, bullish confirmation. If it breaks this little downtrending channel, you want to be buying using the T-line as your stop. What you really want to see is a break of this level right here. FedEx, another one that's doji right here on the T-line. It needs to open positive if you want to be a buyer. MCG also want to see it open positive, doing a doji sandwich after the bullish Harami right on the 50. FSS, doji sandwich, want to see that open positive tomorrow for your doji sandwich setup. MZR, yeah, you hang on to this. A little light on the volume, but not terrible. But you can hang on to it as long as it stays above the T-line. GNTX needs to open positive. AMBA, this one you can be buying on positive trading. That's a good looking chart. We're seeing a lot of these type of charts because this market's just not quitting yet. This one, you go short if it opens weaker tomorrow. You should have been out of it today because after a doji right on the T-line, it should have opened positive. ICON, Pshaw. Nice J-hook pattern. That's a clean looking chart, especially if it opens positive tomorrow. Did Arna, let's see. CTRX, stay short until you see a buy signal. And Tesla doesn't show anything one way or the other. I wouldn't be long. I wouldn't be short right now because it's below the T-line. Nothing showing any strength until you see a real strong buy signal. Now, if you're buying this tomorrow, after today's Morningstar signal, just be very careful once it gets to the T-line. Oh, man, let's see. UNG, this one you stay long as it stays above the T-line. It needs to open positive, though. And Facebook, you stay short until you see a buy signal. DGI, another one that you can be buying on a positive open after the, J-hook type pattern setup. PSX, be ready to buy this on positive trading after your little fry pan bottom J-hook. If this one opens positive, obviously you're breaking out through this level going into wave 3. SLCA needs to get back up above the $36 area to be a buyer. Needs to especially get up above the T-line to be a buyer. Call, not a strong sign. It needs to open positive and trade positive to stay long. If it opens weaker tomorrow, it's a good short because it's going to move in the direction of how they open it after today's trading. Nuance needs to get above the T-line. Little mini morning star signal, but you need bullish confirmation. XLB did a big bullish engulfing signal in today's doji. Very simple. If this opens positive, you buy immediately, anticipating a J-hook breakout. XLF, same scenario. You need a positive open to confirm. Infi, this one with a strong Morningstar signal and a slight pullback. Put your buy stop one tick above today's open. If it comes up through there, is essentially telling you they're going to be, the bull is still in control. And same with OB or OXBT. If this opens positive, you want to be buying immediately. Yesterday's or Friday's bullish Harame told you the profit taking's over. This should be in a J-hook type pattern. Prudential. Put your buy stop one tick above today's open. Blue. Blue needs to get back up above the T-line. Right now, I wouldn't be a buyer until you see it close above the T-line. Apple, I wouldn't be long or short right now. It's moving sideways, not telling you, giving you an indication one way or the other. ABBV, this one you can be buying with a piercing signal, bullish confirmation. A positive open tomorrow would tell you that they are breaking out of this downtrending channel. A big morning star signal on TSRA. This one you could definitely be buying on positive open. Just be aware of what the magnitude of that move will be. From here up to 20 is not quite, just right about 10%. ANR. This one you can be buying on positive trading tomorrow. AUY. Still wouldn't be long or short this one. Nothing here. And LSW, same scenario. It's in a slow downtrend. I wouldn't be buying this. I wouldn't be shorting it. Let's see. We did Prudential Victor. Looking for it to stay above the T-line. I'm sorry, the open, coming back up through the open, telling you it's moving out into new territory. Open, continue to own this one as long as it stays above the T-line. CLF, nice J-hook setup. This one you can buy on positive trading using a T-line as your stop. VRNG, slow fry pan bottom. Good looking chart. You can be buying this one on a positive open tomorrow. Use the T-line as your stop. ACAD, another one, inverted hammer. Positive confirmation, breaking this downward trend channel. You can buy this one on positive trading. VNDA, another one that you can be buying on a positive open tomorrow, telling you the T-line's not acting as a resistance anymore. Oh, pshaw. IBM, slow curve. If this breaks through the 50, which would be also breaking this downward trend channel, going to get some good strong pop, which would also mean more than likely the market is going to be breaking out. Carnival, if this opens positive tomorrow, you definitely want to be a buyer doing a J-hook type pattern. And Potash needs to open positive tomorrow. If it opens lower, close out the position. It means it's having a hard time getting out of this trading range. And 5, stay long as it stays above the T-line. CZR, bottoming in here. This one you can buy on positive trading. You don't want to see this one close back below the T-line. If it does, it just tells you there's not a whole lot of buying strength in it. Yahoo's breaking out through this resistance, needs to open positive. When the candlestick techniques are used, should we ignore the Bollinger Band's influence? Lance, I do it the other way. I use the candlestick signals first, and then you can add whatever you want to on top of it to kind of confirm what's happening in that trend. Dang, you can be buying this one. There's a gap to fill right here, and there's a gap to fill up here. And Hero, whoops, don't want to do that. Gap up, close above the T-line, stay long until you see a sell signal. Yes, MHH is very illiquid, only 23,000, so you wouldn't bother with this one. Bed Bath & Beyond doing a little scoop type pattern. You can be buying this, but this is more of an institutional trader. Notice the lack of magnitude of return on this one. I'd be trading something else. OCZ, as long as this is below the T-line, you don't want to be in it. Obviously, you can't short it because it's a low-price stock. OBTX, you want to be buying on positive trading tomorrow. And URRE, if this opens positive, you'd just be, you wouldn't trade this one. Only 269 shares on $2 stock. That's illiquid. KBH, if opens tomorrow higher, is today's doji considered a morning star? Well, I'd consider this a hammered doji. If it opens positive tomorrow, wouldn't say it was a reversal until it closes above the T-line, but if it opens positive tomorrow, at least you might get a bounce for what looks like about a 5 or 6% move back up to the T-line. Is all this predicated on a positive open in the indexes as a positive open? Yes. That we want to see the market open positive. Now, if the market opens negative tomorrow, you don't necessarily jump into anything until it goes back positive again. CHRW, stay short. eBay, I wouldn't be long or short. It's just sideways right now, no trend. XMIN, boo. MXIM, wouldn't be long or short this one. That's a dull looking chart. ESRX, this one you can be buying on positive trading. Okay, to MAA again. I thought volume over 200 was sufficient for trading. Steve mentioned low volume on a $4.50 stock with volume of approximately 350,000. Yes, my 200,000 minimum is usually with stocks that are trading $5 or greater. So if you've got stocks trading lower than $5, you probably should have volume that's equivalent to a minimum of 200,000 times 5 So anytime you get below a $5 level, to get in and out freely, you probably want to have volume of at least 3, 4, 5, 600,000. You don't want to get caught in some of these. Do you recommend option for 3540 call spread for Yahoo? You can. Depends on what the numbers are. Again, it's all predicated on the mass, so that would be one trade you can do. I don't know what the numbers are for that. Let's see, BORN. Bullish engulfing. Now that's got volume that's big enough. Yes, I would be buying this one. There's kind of your stutter step where you had a Morningstar signal, it pulls back. Now you have another bullish signal. That tells you the bulls are still in control. If you're trading options, I believe the rule of 30x the number of contracts you are putting in. That's all up to each individual, Bill. I mean, I trade some options where the volume is very small, but my position's very small. FIO wouldn't be long or short this one, but that's the type of information that you need to be given back and forth in here, just to give people some sort of framework of what. Now, when I say I do something, that doesn't necessarily mean it's the right thing. That's a nice thing about having other experts around to give their opinions and then convey that information back in here. Let's see, hip stock. I don't know what hip stock is. We used to say volume 800,000, different market now. More is better, all right? All right, a few more, and then we all need to go to bed. GNW, this one is a good-looking chart. This one you can be buying on positive trading tomorrow. Does it matter the price of the stock for volume? Yeah. If you've got a $5 stock, you don't want to see it trading less than 200,000 shares a day, because let's say you're going to buy $10,000 worth, that's 2,000 shares. Or if you're going to buy $50,000 worth, that's 10,000 shares on a stock that's trading 200,000. However, if you're going to buy a $50 stock, you're probably only going to buy maybe 100 shares or 300 shares, something along that lines. So if that stock's trading 100,000 shares, your 300 shares or 500 shares isn't going to move it around all that much or affect your entry and exit strategies. When you say use the T-line as your stop, do you mean on a closing basis? Yes. Not an intraday basis, but a closing basis. Remember, the Japanese race traders mark the open and the close, because the close is your final decision at the end of the day. Let's see, what was the one? Well, ISIS, for example, traded below the T-line, but the final decision was that it closed above the T-line. There was a few more that shows where they close it below where they traded below the T-line, but bring it back up above the T-line. Okay. Anyone here from Geneva, New York area? Okay. Let's call it a night. What's that? Waste of time. That's right. Could I comment on Alcoa? Alcoa, just not very exciting. If you're short, you stay short. Also an institutional traded stock. The last car, no, not the last car I bought the Mercury this summer up in Seneca Falls, New York. There's, Mike, there is a group in Austin that's a fairly active group. It meets at the university. And anybody that has a group in an area where they'd like to have a Saturday morning session live, I'll be glad to come visit. Usually you want groups that are 60 people or bigger, which sometimes means a combination of 2 or 3 groups get together. But at least gives me a chance to see the country and okay, last one, ADSK. That's even though it's at a high, notice where it's coming out of, a fry pan bottom. Coming out of a big fry pan bottom, not coming out of a J hook. Yeah, you can still be buying this one. If you need information or want to sign up for the option course, email Abraham, especially the members. Abraham at candlestickforum.com. So yeah, lots. We're going to be teaching all sorts of strategies. Whoops, that's not the one. DDD calls are just going gangbusters for me. So this is the type of situation, if you're up $12,000 in 3 days on one set of calls, you might have another set of calls where you're flat or down, but the $12,000 gain is what makes your account grow that much faster. Okay, let's call it a night. Everybody have a good evening. Thank you, folks that have gotten the Who is Santa book for your nice comments. If you would just put those out on Amazon, that would greatly help me. So with that, everybody have a good evening. Oh, the last car, somebody was asking, I just bought a 1952 Cadillac that seems in very good shape just north of here of Pittsburgh. So unfortunately, I don't have any place to put it. All right, everybody have a good evening. We'll see you in the chat rooms tomorrow.